We are in the middle of the reporting season, and I was recently looking at the press conference of one of the major companies listed on the stock market. Well, the CEO was talking once again about achieving exceptional results, but not for this period, for the next year, because this time the results were a bit of a mixed bag, and they were falling 70% below consensus estimates, so nothing really exceptional. Then continued talking about an exceptional working environment, with the staff super motivated and super positive, eager to bring the company to top-notch results. At that point of the press conference, I questioned myself about the veridicity of these stances, since I had the feeling that in some article in the past I read the opposite. So that the staff was not so happy about the company, and most importantly about the management of the company. The next day I went on Glassdoor just to check the internal report, and the reviews were showing a completely different picture. Again, these discrepancies between words and facts leave me stunned and speechless, frankly speaking, because you can destroy not only your personal reputation, but also the reputation of an entire company, bringing down also all the people working in there. Hi everyone, and welcome to Beyond Alpha. Today we are talking about a truly fascinating topic: the inconsistency between words and actions, and their deep relations with corporate governance and investing. So brace yourself and let's get started. Have you ever heard somebody say one thing and do exactly the opposite? It's like when a friend promises to help you move, but then they disappear on moving day. Frustrating, right? When this dynamics reflects itself in corporate governance, as well as in everyday life. A great thinker once said, "Your actions speak so loudly that I cannot hear what you say." This aphorism by Ralph Waldo Emerson highlights the impact and power of actions over words. Here are some points to elaborate on. First, consistency between words and actions. Words are easy to say and can be deceptive. Actions, on the other hand, are concrete and reveal a person's true nature. When there is a discrepancy between what a person says and what they do, actions should always prevail in determining how we have to perceive them. Second, credibility and trust. Trust is built towards consistency and the reliability of actions. A person that makes promises but does not keep them will quickly lose credibility. So we can say that action consistent with promises strengthen trust. And this is one of the main concepts exposed by Robert Cialdini in his book Influence that I suggest you to read, because consistency and respectability are psychological principles of foremost importance in everyday life. Moving on. Number 3, impact and actions. Actions have the bad habit to have tangible consequences in the real world. They can directly influence people's lives, the surrounding environment, and society as a whole. On the other hand, words without actions do not produce a real change. As Warren Buffett once said, it takes an entire life to build up a reputation and only 5 minutes to destroy it. Number 4, example and leadership. Effective leaders lead by example, and people are more likely to follow who demonstrate through their actions the value and importance of what they preach. And this is clear. A leader that can act consistently with their words inspires respect and imitation. Number 5, authenticity. Sincere and genuine actions reveal a person's true personality and intentions. Authentic people in these regards tend to act in accordance with their values and their beliefs, making words unnecessary. So less talks and more facts. In substance, Emerson aphorism reminds us that actions have a greater weight than words, and are the true measure by which we gauge a person's integrity and reliability. Actions, being harder to falsify, are a more authentic testament to someone's character and intention. Now, looking at the fact that during the press conference it was clear that there was a massive discrepancy between the words of the CEO and tangible facts, ultimately spoiling his credibility and impacting negatively the performance of the stock price of the company after the press conference ended, being a clear indication that also the investor base didn't like this kind of approach, and they didn't get fooled by sweet words without substance and credibility. And this is also one of the reasons Anthony Kingsley, one of the biggest investor in UK, tend to value quite thoroughly corporate governance and the integrity of the management, simply because a trustworthy management is one of the metrics to be considered to value an investment, being it good or bad. But let's not stop here. These inconsistencies are not just about big companies. Think about how many times we have seen politicians promising the moon and the stars during the election campaign, only to forget their promises once elected. Or think about personal relationships, where words of love are often not supported by actions. Words are important, but actions are even more so. How we can then screen and distinguish who is consistent from who is not. Here are some practical tips that help me on a daily basis in my private life and investing. First, observe the facts. Look at not only what people say, but what they actually do. Second, seek testimonies and feedback from those who have a direct experience. Third, ask precise and specific questions that can highlight any discrepancy. And the very same question you have to pose also to yourself, because often we are the first and most impactful saboteur of our plans, and we tend to deny the evidences. So pay attention to yourself as well. Now, don't get me wrong, nobody is perfect, and we can all make mistakes. But consistency between words and actions is fundamental to building trust and credibility, both in personal and professional relationships. Now, what do you think? Did you ever experience a situation of inconsistency between words and actions? Tell me about it in the comments down below. And last but not least, if you like the video, don't forget to give it a thumb up, subscribe to the channel so you don't miss the next content. And remember that action speaks louder than words. Thank you for watching and see you next time. Cheers.
But, a lot of it is just incredibly common sense. On management, look for management that you can trust. Look for CEOs who've got a track record in the industry. Be careful about management who are selling stock or giving aggressive guidance. Be careful about management who are, too smooth talking. Be careful about management who are running the business with consistently levered balance sheets and rolling up acquisitions. Look at it, to your point about incentives. Be careful of management whose incentives are not aligned with those of shareholders. So those would be just a handful just on the management side, and we could go into the business side or the process side. But it's just lessons over time that we have learned that help us avoid permanent capital loss.